$9 million verified.
You want to long on the front side, and then you want to sell your long at the top. Some of them have good routes. So I have like the best route. Like here, I use Arca. So that's not a very big number. Like if it's say like 100 billion, that might be something big. So I shorted it when it went up at the open. It just went apeshit. And they also have a decent amount of debt, 28 million, and they also converted the debt to shares. So this is a good opportunity for the people. So I basically look at everything going on. I try to avoid shorting.
Today we have someone very, very special that we're interviewing. He was broke at 38 years old, days away from moving back and living with his parents. Since made $9 million verified, 500K in the last 30 days, 100% third-party verified on Kinfo. We don't interview unverified traders, and you can find him at Aikido Trading Enigma on Kinfo. I hope I said that right. You can correct me. But today we're going to look at this specific Aikido trading method. And we're also going to run through his profit curve, review some charts, talking about his hotkeys. He's actually very open to deliver some real examples to try and give back and help after he's made all of this money. So without further ado, how are you?
Doing great. Thanks, Stephen.
Adam, broke at 38 years old. That must be incredibly... how did you go broke at 38 years old? That's the first question I've got for you.
Yeah, it was terrible. Yeah, to summarize it, basically, I used to be a professional poker player when I was like, younger, living in Los Angeles. And so then I decided I was getting kind of tired of playing poker, and I wanted to get into the stock market. So I got my while I was playing poker, I got my CFA exam or CFA designation. And then I moved to New York City to to get experience with hedge funds or mutual funds, and work in New York City. And so at that time I basically lost all my poker winnings in the stock market. I lost everything from trading, just like kind of shooting in the dark. And so I had a couple analyst roles in New York City. I worked for a couple funds. One of them was Martin Shkreli's biotech fund. So I learned about biotech from working for him. And then I from there I wasn't really that good in the corporate setting. I didn't have great social skills, and I just it wasn't really my thing. So I started my own business of research. I was doing my own research on stocks, small cap stocks, and I would sell my research to high net worth individuals and hedge funds as well. And at that time I was publishing on Seeking Alpha. Right now I have my own website for that. But from there, I moved out of New York City because I was paying like, a lot at the time for like a tiny studio apartment, just one room. And plus I wasn't really into the weather. So I moved to Medellín, Colombia, and I was living there, and I was just kind of working on my business. And yeah, I just basically ended up getting broke. I mean, my business kind of dried up. I was losing in trading, and so I just basically went broke. I was getting, the cost of living in Medellin is very low. I was paying like $300 a month for my apartment. So, and food's really cheap. Everything's really cheap. So you can live there, being poor, you can easily live in Medellin, in Colombia. And then, what happened was, I was just about to move with my parents. I was doing like a little odd jobs on Craigslist, whatever. And then I just started figuring out more. I had a mentor which was from a hedge fund that I was working for. I was doing research for the hedge fund, and I got a mentor through him, and I saw the way he was trading, and I started just kind of doing what he was trading. Like I asked him, like, yeah, so this stock, did you short that one? He was like, yeah, did you short this stock? Yeah. He's like, wow, so you shorted all these stocks? And this is like a hedge fund analyst. I'm like, wow. So like, okay, so maybe I should try doing the same thing, shorting these small caps. So I started doing the same thing, and it ended up working. And I kind of developed my own method. And I want to be a mentor for people as well who might be struggling with trading. I want them to trade my method, teach them, because I'm not like a super genius or bright guy or anything. I think I made most of my money from my method, which, we'll go over on this show. And it's through Aikido Trading Method.com. Go on the site there, and you put in your name and email, and then I'll shoot you an email and tell you, how we can do the mentorship, and help people learn my strategy, my method.
But like first, I just want to understand. So like your background is in poker. Like, did you go to like university and stuff? Did you study anything related to finance or banking or anything like that? I'm just curious, like how did you get into a fund with no experience?
No, I graduated from UC Santa Barbara in 2001. I got my business economics degree, and then, like I said, I got my CFA designation. So
Yeah.
that's kind of a rite of passage. That's like a 3-year program. You got to study like 1,000 hours of study, and that gave me a good fundamental basis. But as you know, I mean, trading isn't only fundamental. I mean, that's just a small part of it. It is part of it, but technicals are more important than fundamentals when it comes to trading. And then from there, just from there, I mean, I got my CFA, and then I could work for hedge funds because they said, okay, I got my CFA. That's a big plus. And so I got some jobs. It was difficult, but I did get jobs with a couple different outfits there before I went on my own after that.
And then this the hedge fund contact. Did you meet him kind of through the industry when you were in New York, or
Yeah,
how did you make that connection?
I ended up knowing a bunch of people, and I was distributing my work because I started my own business, White Diamond Research, and I was selling research to hedge funds. And so I just got made contacts, just networking through different hedge funds, and that's how people got to know me.
Yeah, no, I'm just trying to piece this together because always when it's with Kinfo, it's kind of a lot of newer traders, a trader with a couple of years experience, and it's trying to how can they emulate your path? But I guess did you learn the research and analytical skills through your time working at funds in New York, and then you started did you start doing that on your own, or did you learn that a different way?
Yeah, basically through hedge funds, also that CFA exam helped a little bit. Learn how to fundamentally analyze companies. And from there, I just started working with hedge funds, see how they do. And then I got the mentor, like I told you about, the hedge fund analyst that helped me learn how to trade. And now I don't have to work for hedge funds anymore. I just trade my own money. I just do my research for myself. And I have one client, I manage like $3 million of his money. He's just a retired older guy in Palm Beach, Florida, and I just manage his money, and that's pretty much it. I just do everything else on my own.
So I've actually been to Medellín as well. It's a beautiful place, but I'm just curious, uh, from what point did you go from you're living in Medellín, your research business wasn't going too well, and then you've made 9, $10 million trading? Like what clicked and changed there?
Well, it was the mentor, hedge fund mentor. I started trading, the way you said, but I think sometimes it could just take a little something small that holds you back with trading. There might be just some little thing in your game that's holding you back. And if you just solve that one issue, I think you could make a lot more money. And the thing also with trading is exponential, right? So like if you could be broke, right? But then the more money you make, the higher you're betting, the bigger your trades, you make even more money. Then you make even bigger trades. And so it's just exponential. So you can make money really quickly in a really short amount of time if you have a winning strategy.
But like, what's an example of a small thing? Because like they always say that old thing where like you could be so close to reaching the gold when you're digging with the axe that you don't know, or it can be that small thing. But like for you, what was a small thing that you changed that just boom, it started working?
Well, I'm trying to think what exactly was the issue for me. I think knowing that I can, short small caps and, be okay. Short a lot of different small caps. And I just saw the way they just constantly faded after going up on news. There was that. I just started was getting better at that. Um, and there's speed bumps along the way, but yeah, I mean it was just working. It just worked for a while, and I had the fundamental plus technical advantage there. Now, if you wanted to take a look, I can share the screen here. I'll show you what it looked on my Kinfo. So this was starting back. This is in 2000. Was it 2020? Yeah, so it's 2020. So yeah, so you can see here. So it was kind of a struggle here. So I started, making more money that year in 2020. And,
Wait, did you make $1 million then nearly lose it all again?
yeah, so I made, looks like, at least this is just on the Kinfo way. Yeah, I made close to 1 million. So then I moved to, on January 1st, 2021, that's when I moved to Puerto Rico. So I'm in San Juan, Puerto Rico. And I started making money, and then I lost it and went down to, yeah, I lost it all. And then
Like, what?
from there,
Stop it. What happened? Like, how did you make $1 million and lose it in 2021? What happened, mate?
well, I think what happened was it was just an extremely bullish time. And I was shorting like with big size, and I had a couple shorts that ended up losing me a lot of money, like, well, quite a few actually. And we can go over it as well too. Like recently here, you can see I've been losing as well. A lot. It looks like I had a drawdown, probably close to 1 million recently. Not quite 1 million, maybe half a million, but then I made it back over the past couple weeks. But just because I was just getting caught in these tough sectors. And that's one thing that that I go over in my method. You wanna avoid shorting themes if it's a theme. Like back here was the electric vehicle theme. There was quite a few themes in 2021. It was just an extremely bullish time at the beginning of 2021, because that was right when Biden got elected. And usually when there's a new president, then it can be a very bullish period. And so you can see from there, I ran it up. I did well. I ended up doing well by the end of 2021, kept running it up. 3.6 million in 2022. 2022 was bearish. So you can see I made more money in the bearish times. Because I mostly short. I'd say 90% of my trades are short. And then from there, it kind of went sideways for a while. And then you can see I had this really great run up here. Now that can be a foreboding to disaster, because then I got this one loss here. So what happens is when you're doing really well, you think you're invincible, right? Like you think you can't lose, so you might go get much bigger size. And then this was a trade here. This was a company called Top, and that was a scheme. And I'll go over those later. There's themes and schemes. Those can really hurt your short positions. And a scheme is when a stock is just brought up artificially. When bunch of insiders get together, or it could be, just a couple insiders, and they just say, "Okay, let's just buy up all the float. Let's just run the stock up so then we can sell it later." And so this stock went from like $5 to like 250 in one day. And so I lost a lot of money because I had a big investment and I was stubborn with it. Um, and now I've changed, especially after this one, which I'll show you here, but you can see, so that was April 2023. And then I ran it back up. So by September, well, let's see, so around, I guess, September 2023, I made it all back. So I lost 3.5 million here. Well, I guess maybe 3 million on Kinfo. Made it all back by September. Then I ran it up some more, and then it looks like I had kind of a rough period here. And then this one was like a terrible trade here. I lost a total of $5 million because I was managing friends' money and also my own money. So and a lot of accounts went below zero. This stock was BMR that did this. It went up 1,000%. And so since then, you can see I don't that doesn't happen to me anymore. I've adjusted my strategy to prevent that from happening. Now I have a stop loss of $200,000, like a max loss. So I don't foresee this happening unless it's some crazy freak situation. But yeah, like my strategy now, I like it better. I'm more conservative. I took a lot of money out. Like when I lost all this money here, I had a couple accounts that were like $1 million or more, and they went to like negative $1 million. They went from positive to negative million. So now I have smaller accounts. Like I put my money in safer investments. And I don't have all my money in the stock market. But this time I was just like, I just wanted to get rich really fast. I wanted to put all my money in the stock market. I had too much of my net worth in trading accounts. And so now I'm much more diversified and much more measured. And so I had to adjust my method to be more careful.
Man, like you must be a man of steel. Like how on earth can you have the appetite to lose $5 million and then recover? Where did you develop that? Is it something you've had from a kid to not care about the money?
Well, no, I took care about the money. It's just I had to make a decision right then. It's like, do I want to just retire and quit doing this, or do I want to keep going? And I had a lot of emotional feelings about it.
Can I just quickly ask, how much did you start with to get to this 10 million level ish?
Just $60,000. I mean, I was pretty much broke, so I just got back 10, 20,000 and just worked it up. What I learned from these big losses, this happened once in 2023 in April, and then it happened in May, or actually February 2024, is, sometimes just the stocks can just go nuts in one period, and I try to just get out before it reaches that time. Like, sometimes a stock is a good short might be a good short at $5, but it's a bad short at $10 because it's in some crazy short squeeze, loop that just makes it go to insane heights. And so that's why it's good I have the $200,000 max loss now. And I have had a few of those 200,000 max losses over the past couple months with like CYN, ASST, which was a crypto treasury, and it's just mistakes that I make in the moment, and I just have to learn from my mistakes and just move on better. But at least now I have that max loss, so that'll prevent me from having a $1 million plus loss again.
No, like, I think you couldn't have said that better. I think it's probably my favorite line of the episode so far. It's that the higher normally a short goes, the better the short is. But you've just said something really powerful there, that it can be a good short at 4 but a bad short at 10, or it can be a good short at 5 and a bad short at 10, specifically for the mechanics that everyone's getting squeezed and it can go to 100. But
Yeah, it is weird to hear that because you don't get trained that like in the CFA or in college. You don't get trained. You just get trained like this is what a company's worth. This is the intrinsic value. If it's over that, it's overvalued. But the actual mechanics of trading it's not always equates to that. And since I'm trading every day or most days, you'll run into those kind of black swan situations once in a while.
But I'm really excited to get the trading method at this point. I'm sure everyone else is. So I'll let you kind of take it away so you can give us kind of an indication of your style. And if you can touch into a little bit of the fundamental analysis as well, I'm quite curious as how the fundamentals link up with the technicals.
Yeah, so it's both fundamentals and technicals. So let me go to the website here. So here, I got the Kinfo here at the top, and
Beautiful.
some realized unrealized gains here. And now this top one, this was an example RSLS of a what I call a scheme where they bring the stock up artificially, and they run it up because it went from like 50 cents to $3 and then back to 50 cents. And what they did was they had a bunch of cashless warrants. So basically, it means that they can basically sell stock at that they got for zero, that they bought for zero, they can sell it. So they would basically sell 14 million shares at any price. One fund that had these warrants, they just needed to get shareholder approval. And then once they got the shareholder approval, an 8K came out and it instantly went from $3 and crashed to like 50 cents. So that was a good timing there on that one.
But
And
just when you're saying that, so you need to have some indication and a good knowledge of the SEC filings. So you know, because you went through the filings, you know that these warrants or this dilution is open. It's just a matter of when the shareholders give the approval for it to raise the funds. Is it something like that? So are you already short? Are you already short, just waiting for it? Oh,
I was at that particular spot, I was already short, and so I in a way I kind of got lucky on that trade. But then I saw the 8K come out, and then I realized, okay, it's gonna get dumped. So I didn't cover right away. I was just holding my shares because I had shorted around $3. And then when I saw the 8K come out, I quick looked at it. I'm like, okay, that's a shareholder approval. And I didn't cover until it was like like below a buck.
And what put you onto that stock in the first place? What put it on the radar? Was it like a top percent gainer or?
It was just kind of a runner. It ran all day the previous day, and then I shorted it the next morning, thinking that it was gonna fade.
So at the top percent gainer, this stock's a piece of shit. Why is it running? Let us look at the SEC filings and see if they're planning on running it, pumping it to dump it. Is it like that or?
Yeah. I mean, yeah. It's just because I look at all the top gainers, and then I analyze why is it up? What's the reason? And sometimes there's no reason, and then from there you got to figure out, okay, when is it gonna fall? When's the right timing to short it? Or or it could be a long when you want to long it, because ideally you want a long when a stock's moving up. When it's the uptrend, it's called the front side, and then when the backside happens, you want to short. So ideally, the best way to trade, and this is what I'm learning myself, and I do long as well, on occasion, but you want to long on the front side, and then that's when the news first comes out. That's when the trend's going, and then you want to sell your long at the top, and then flip short on the backside. You see what I mean?
Yeah, no, it makes full sense. Makes full sense.
Yeah. So that's what I want to get better at doing is being able to time it, to have the better timing. And then you can see this picture of me. I'm kind of in a meditative state. I've been trying to meditate 10 minutes a day, and I usually do meditate 10 minutes every day before I trade. And that's what I recommend people to see. In meditation, it's not like you just close your eyes and you don't think, but meditation helps because you can kind of close your eyes and figure out, what are you feeling right now? What are you thinking about? Is there anything that's, making you feel emotional? It could even be a bad trait can make you feel emotional, or, if you get in an argument with your girlfriend the previous day, or, somebody did something to make you angry, that can all affect your trading. And so I think it's important to meditate, at the beginning of every day to get to see where your mind frame is at.
Nice. I mean, could you give us an example of kind of how you would break down a specific trade, or if you have a specific trade or a chart, just so people can see like the full process of, okay, this is on the scan, this is an entry, this is what I look for. Like even an example of one trade, how it works.
Yeah, yeah. I'll go over those trades. But yeah, so this is the website, and then you go to the free training, and then you'll see there's a 7-minute video of me. But if you put your name and email, then I'll send you an email. If somebody wants to be mentored by me and learn my trading method, the Aikido Trading Method, that's how you get in contact with me, or they can get in contact with me on Twitter as well.
Perfect.
All right, so these are some of my brokers here. You got Cobra. Okay, cool. So these are some of my brokers. So they're all DOFs. So they all have the same hotkeys. You got Opal. This is Center Point. And the hotkeys I use are so here's the trade here. And like a 1 is 5,000 shares, 2 is 10, 3 is 15, 4 is 20,000. So normally I trade small cap stocks or even micro caps. And so I trade usually in like blocks of 5,000. So then a 0 is 50,000. So that way I don't have to type in the amount. The amount I sometimes I still type it in, but this is just a quicker way to do it. And then now some of them have good routes. So I have like the best route. Like here I use Arca. For Cobra, the best route is REB25L. So I have the right trading route. And then Control P is just the position size. Like right now, I swung short IXHL, which that's a trade. That's one of the trades I want to go over. And yeah, so that's basically how that works. I also use a trade route called TWAP L. Now this is because I use big size. I mean, people that use small size, they don't have to use it all the time. But what TWAP L does is it trades the same amount through a different time frame. So like let's say I don't want to cover the entire IXHL like right now, but I just want to cover part of it. And also, I may not want to do a huge order. I may just want to do a little bit so it over time. So I can just say cover the 3 to 30,000 shares equally amount through the whole day. So it just buys or sells, an equal amount through the rest of the day. So those are what I use for these brokers.
And one of the routes you mentioned was had the word red in it. So I'm presuming you're doing rebates. You're playing that game of getting rebates on your trades to reduce your commissions, which is a big thing to keep your costs down.
Definitely, because if you if you do more limit orders, you pay less fees. So I usually do limit orders.
Yeah, and are you getting ACN rebates on that?
Yeah, yeah.
Yeah,
Was our
um,
REB does that.
yeah.
Yeah. Okay, and then I wanted to go over a couple trades here. So there's let me go to my trades. These are just recent trades that I made. So let's go over. This is kind of an interesting one. STAI. So what I did here now, you see, there's different days because I swung part of it. I held it over a few days, and now what's interesting is I don't think you. Yeah, so I didn't. I might not have covered it all the way in Interactive Brokers because actually, I think I did. So I wonder why it's not showing the Interactive Brokers on here. Um. Anyway, that doesn't matter. I'll figure it out. But you can see that I traded it on the 28th. So this was the news came out in the after hours. So I like trading the after hours, and I shorted it, and the news looked really weak to me. Now I have a program here. This is News Edge, and on the 28th, the it came out. So part of my strategy is I analyzed the PRs. So the PR came on the 28th in the after hours. So this is 4:05. So if you analyze this PR here, so it says they got a deal with Vision Tech Systems to sell their Sentinel systems, which is like it's kind of like a luggage scanner, like they have at the airport. So I did some research on this company, and
If you're enjoying this level of transparency from million-dollar traders, hit like, hit subscribe. Helps the channel more than you know to get more guests like this and more guests like this verified on Kinfo.
first of all, it says it's a non-binding letter of intent. A non-binding means it's not a real contract. Like they can either party can back out of it at any time. So that is a little bit bearish right there. That immediately is sort of like it's a little bit bearish. I mean, they might have gone to Vision Tech Systems. They might even said, "Hey, do you mind if we just say we did this? We can put out a PR." And they're like, "Yeah, go ahead. You know, we can. We're not bound to buy it or anything." And then so then it says they already had a deal for the Wi-Fi million that they made a month or two ago, and then they said the value of the additional exceeds $1 million. Now that's a small amount of money for a company, for a public company, $1 million. So that alone gave me sort of pause. I'm like, this PR really is not worth much. I mean, it's not a big deal. And so it was up a decent amount. It was up about 50%. I shorted and then covered in the after hours. Then the next morning, it went up again on the 29th. So then I shorted it in the pre-market and then covered. Then they put on extra news here right before the open. You see this says 9:21 a.m. So they put out back-to-back news right before the open. In addition to that, I got some information that they actually were paying a promote. It's a paid pump, basically. They were paying to promote the stock. So with this one right before the open, it said that they got a contract with Creeksource Consulting. They're sort of just promoting, they're marketing their products. And then it says here, this isn't a sale. This is just saying it's a potential $100 million market opportunity. Now, again, $100 million is not very much for like a market opportunity because that's like the size of the company itself. And they're just talking about the entire market is 100 million. So it says an estimated $100 million addressable market. So they're not saying like they can get that entire market. That's just what they can address to try to get a sale. So that's not a very big number. Like if it said like 100 billion, that might be something big, but just 100 million is not very big. So I shorted it when it went up at the open, and then it just went ape shit. I mean, during the day, it just went up super high. And so I was shorting more at a higher price to get a better average, but I was still underwater. So what happened was basically just to sum up what happened is the previous day I shorted at like $1.10 and then I covered at like 90 cents. Then in the morning, I did the same thing because it went back to $1.10. I shorted $1.10 and went back to 90 cents. So then, with the paid promotion and this PR, it again went back to $1.10 with this new PR in the morning. So they had back-to-back PRs, and then it just went up to like $1.50, the high up there. And so I got in again at $1.10, and then I added higher and higher. So I had like max size, and I was underwater quite a bit. I didn't get to my max loss of 200 million. I mean 200,000. I didn't get to not the way it. But yeah, max loss. Yeah, yeah. It didn't hit my 200,000, but I was down six figure. I was down over 100,000 at that point. But I just looked at this company, I'm like I just looked at the now also what I looked to, which I wanted to show you as well, which I didn't get to yet, is I got hot buttons on these, on the DOS. So you go STII and if you just click on StockTwits, see it pulls up the CA on StockTwits, and we can see what people are saying on the stock. And then if I wanna look at the fundamentals, I go to YF Yahoo Finance. So Yahoo Finance, click that. And then I can see, okay, so this company, look at the financials. Um, basically, they made zero revenues in the quarter ended September 30th. They only made 365,000 on March 31st. So their revenues are terrible. They're losing a decent amount, 2 to 3 million a quarter, and they also have a decent amount of debt, 28 million, and they also converted the debt to shares. So this is a good opportunity for the people that converted their debt to sell their shares, like this run up. And you can see, looking at the historical data, it is an extreme amount of volume. 319 million shares traded that day on July 29th. And so that was a good opportunity for the debt holders to convert their debt and then sell their shares in the open market. So I held on tight. If I did hit my max loss of 200,000, I'd pretty much have to cover because I have that rule. I might cover a part of it because I did have a really strong bear case on this one. I was really convicted on this one, but luckily it didn't hit my max loss, and that's sort of a lesson too. It's like the way I trade, if it hits on max loss, often I'm just wrong. If I just was stubborn and not getting out of my max loss, it could reach $1 million loss. So, but like I said, luckily it didn't hit that, and so I held it. I swung it, and if you look at August 5th, look at where it was trading on August 5th, like 60 cents. You're trading at 60 cents, and you can see here, I held it all the way to a good chunk of it, all the way to August 5th. So I made most of my gain by swinging it short for a few days.
But like, can I just like, because I understand the strategy that you're talking about, and it's a strategy that a lot of short sellers try and do. They look for in hot markets, they try and pick out the weakest stocks. Sometimes that can be by volume, the stock with the less attention, because less attention, it's less volume for it to run, or for the worst fundamentals. But you seem to be doing it better than everybody else because you're making $10 million doing it. So, and a lot of short sellers will make do well, do well, do well, do well, then blow up. So like, what are you doing differently from the other guys, do you think?
Well, no, you're saying I did blow up, but a year ago, but I'm not blowing up now though, because I am very, very careful now. But for me, I think what I'm doing better is I'm looking at every aspect of the stock. Like you look here, like I'm looking at StockTwits, I'm looking at Yahoo Finance, I'm looking at Dilution Tracker. You're familiar with Dilution Tracker?
Yeah, of course.
Uh,
Yeah, yeah.
I mean, that's essential. I'm looking at the previous news on Finviz. Finviz, you could go back as far as well. I'm looking at everything. I'm looking at what people are saying on StockTwits and Twitter. Here's Twitter right here. So I basically look at everything going on. And like I said, I try to avoid shorting themes and I try to avoid shorting schemes. And in this case, it wasn't a scheme or a theme in my analysis. Now, schemes, like I said, that's what happened with TOP, TOP. where it just the insiders, the Chinese, a lot of Chinese stocks do this, where the insiders are like, let's just buy up the whole float, let's run it up, 10x, 20x. Well, in Top's case, uh it was like 50x. Let's just run it up and we'll just squeeze all the shorts and then we'll just sell. Once the shorts are squeezed, we'll just sell our shares. And 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 so by the way, with that on top, I actually heard that that happened in April 2023, that the insiders, they didn't buy any shares in the after hours. And it went from like $20 to 150 or 200 in the after hours. So the after hours is all short covering and that. So it just basically runs on its own. I mean, once you buy up the whole float, often you can just see the short squeeze, just squeeze it up if you get more shorts involved. And
We've
that's
seen this with
it's
like Elfin, HKD, like this happens over and over and over every now and then.
yeah.
But like the $1 million question now is how do you identify? You can identify a theme. It's obvious because it's in the news and all the sectors running. So you know when a hot sector is running, which is a theme, right?
That's it. The
Or
hot
something.
sector theme. A
So that's in the
scheme a
news.
scheme is when there's nothing hot about it. It's just going up for no reason. There's just no reason for it to go up, and it's just people buying basically just to manipulate it up, basically, or just to squeeze the
Million
shorts.
$1 million question. You know the answer. No one else. Not many other people do. How do you identify a scheme?
There's a few ways to do that. I mean, I explain it in the in my method, but one way is to see who is behind the scheme. If it's some guy hidden in the shadows, that could be a scheme. Now, if you look at something differently, let's take let's take a look at STI, because like I said, it wasn't a scheme. So you can see who owns. You can see on the loose tracker who owns like the warrants or the like if it's somebody that's well known, like for example, Armistice or like not Nahala or like few other funds.
HC Wainwright,
Uh,
anything to do with these guys? And
um,
the
it could be but that's not a fund. That's a investment bank. But it
yeah.
maybe they don't do schemes. I'll have to look more into that. But if it's a fund that is just constantly doing these, you know, micro caps, just like selling the shares and buying, they don't have time to play games. Like once they're in the money on their warrants, they'll sell right away. So like if I see Armistice involved, I'll know it's not a scheme. It's the ones that are like unknown that can do the scheme. I mean, that's just one thing. That's just one way to figure it out. But also, of course, you can't have if someone's doing a scheme, they can't be like having big holders that aren't part of the scheme, or else the big holders just dump right into them. It's got to be the holders need to be part of the scheme themselves, the big holders, and usually insiders need to be a part of it too. It's something that they might have been planning for weeks. They're like, okay, we're gonna on this day we're just gonna buy up all the shares, all the float, and just run the stock up. It's like a few people, just decide to do that. That's what a scheme is.
Crazy. So you've
Uh,
identified exactly kind of the fundamentals which you can spot in the SEC filings of the typical players and the typical structures of a scheme. And you can identify it, and that's how you start. And that's a huge edge because you know the shorts to avoid or wait to hit bigger later when the scheme's complete.
Yeah, there's just too many opportunities to get involved with something that might be a scheme. If I think there's any chance it might be a scheme, I don't want to get involved. I'm like, is it going up for no reason? And is it, squeezing shorts? Like, I just won't get involved. Sometimes I try to long schemes, but that's another challenge. Because you don't know when the scheme is going to end. Like at any time, they could just drop it on you. Right, right. So,
No, it is.
so yeah, I mean that's another skill to try to learn yourself. Now the theme is with what happened with the BMR. Going back to where I had that $5 million loss here in February. That was they had a deal with Nvidia. No, they previous peers, they also said they had a deal with Nvidia, and the stock didn't do anything, and that's one of the reasons why I was confident at the time. But this NVIDIA theme, we're just seeing over and over again, even if they're just using like an NVIDIA product, just the word NVIDIA can cause a theme. And that's just a bunch of retail traders just buying it up and people shorting, and the shorts just get squeezed. And that's any theme. No, theme has to be like a big theme, like something that gets big enough where there's a lot of shorts, a lot of longs, and the longs will win, and the shorts just get squeezed out of their position. And as they're getting squeezed, they're fueling the fire. They're like pouring gasoline on the fire, and it just goes to like insane heights. Yeah, so I try not to short those situations.
I completely understand what you're saying. What gets me is a lot of like we haven't seen many charts that you've shown, and I think that's quite. I'm just curious, how much is your trading time? There's a couple of things I want to say, but how much is your trading like the fundamentals and just knowing what you're trading, knowing whether it's a theme or a scheme or it's just a shitty company, and you're going to take advantage of the pops on the news. How much of it is that, and how much are you really trading technical analysis? Because you haven't showed many charts yet, so I'm just curious, is it more about this than the technicals?
I think overall, I would say it's the technicals and fundamentals. Um, I think technicals are more important. Now, it depends what fundamentals could be a loose term. Does it mean the intrinsic value of the company, or does it also mean a headline, or, who's owning it? Like technicals and fundamentals, they kind of blur into each other a little bit, what you're talking about, but I think they're equally important. I mean, they're pretty close to being equally important. I might put a little bit more weight on technicals if as a trader, because certain times you wanna you need to wait and wait for the right timing, and that's what technicals can give you by looking at volume, time of day, looking at the chart, all that stuff, whether it's market hours or pre-market or after hours, like all that is like technical analysis.
I think what you cover, I love your story, by the way, because you're a guy that's made, I think you're in the eight figures, right? You have 10 million plus, you just need to verify.
Yeah, I made money that's not verified too. That's not on things.
So like you're up 9, 10 plus million. I haven't met anyone, but what interests us about you is I've never like most trading teachers or most people who teach trading or give back into trading, they'll double tops, short into resistance, and then maybe they'll talk about don't short low floats, do short low floats, don't short sub pennies. They'll give all these rules, but no one, and they might say don't short hot sectors, which is what you're talking about with the themes, but no one goes into the depth of how to identify the structure of what potentially can be a scheme. And I think that is could be what separates a trader who makes couple of $100 to a trader that makes millions of dollars. And
Yeah, I look at all that stuff too. I mean, yeah, I mean, all that stuff is definitely what you want to look at. Short resistance, cover at at support. I look at all that stuff too, but it's just one piece of information in addition to everything else that I put in. Like I want to get as much information as possible about a stock, and that's what makes me a discretionary trader. Like a systematic trader, might have a few indications, but a computer does everything, and they expect to lose a certain amount, win a certain amount. But for me as a discretionary trader, I know uh, when to get bigger size, when to enter better. And I'm not saying being a discretionary trader is better than systematic, but if you're able to have a good method, I think it is better if you're able to um know how to like change size. Because a systematic trader will say, well, if you're using discretion, you're going to mess yourself up. You're going to make the wrong decision. But I think you can make the right decision as a discretionary trader.
if you know what you're doing and you're good enough, you can. But it's like, but what I'm interested in is like you're. It's not like you're like cut losses quickly because you're letting it stop. It's more. I think what understand from your style is you really look into the company, you understand the thesis, and you have conviction. And then the stop isn't like, oh, I'm in and I'm out for 2%. You're going with conviction and believing in your bet, right?
You know,
And then if it doesn't
sometimes I
work,
do.
it's lost.
Sometimes I do cut losses quickly. Like for example, with this recent one in MXT, I come in last night, got in at a higher price. I think that's something you do want to aspire to do. Like if you're pretty sure that you get a better price later, and and the volume's not an issue, or like the sizing's not an issue, you do want to get out and then get in later. if you got in too early.
Yeah, but so I mean, you're looking for a lot of the because I think what gets me is I think a lot of traders are kind of nearly at the level. You said it earlier in the interview. A lot of traders are nearly at the level, but they just need to do a couple of things. A lot of short sellers know how to read charts. They know about exhaustion candles. They know about death candles. They know how to find entries, but they keep on getting sucked into the wrong stock. That's a scheme, and I think they somehow get sucked into a theme because they weren't aware that a hot sector was just about to develop or something like that. And I think you're helping shorts avoid the blobs to me.
Yeah, I mean that's part of part of what part of the whole system. I mean, discretionary, and you saw I had a couple blowups before, and I still have them, but they're at a lesser level now. And it's that's part of being a great trader, is learning how to avoid the blowups, because there's no point in like getting 10 trades in a row correct, and then the one loss that's bigger than all the 10 wins you had. That's a fate that a lot of short sellers run into. They'll like have 10 small wins, and then one big loss is going to wipe out the 10 wins. I mean, what's the point? You have to be able to avoid those big losses
But I mean,
with
and
it.
that's short selling, though, right? Like you're trading small caps. It's a fundamental market where 99% go to zero, and then in the end they go bankrupt. So it's not a hard game to short companies and small caps and expect them to go down. What is a hard game is not to blow your account every 2 months.
Yeah.
That's the art.
Yeah, and and longs go through similar things too. Like longs can be brutal. Where like the stock can just keep falling and falling and falling, and you just can't get out. Like I've tried. I go run into that myself. Like when I long something, I'm like, oh my god, I can't get out of this. It's not hitting my price. I have to keep lowering my price. So I think longs run into the similar thing where like they can have a string of wins and then one big loss.
You give an incredible amount of detail. We've gone like 30 minutes on trading examples alone. Do you have any other examples that you want to run through? Or do you want to kind of close it out, Char, and people can look on your website? We'll put the link in the description below if they want.
No, I think it's good for now. I think that's enough. Yeah, if they want to someone wants to go through examples, they can contact me directly. I can, if they want to look at my Kinfo, because I show my trades on there, I can explain to them, how I made a certain trade, and we can go over the strategies of it.
All right, man. I, I don't think we've ever had anyone who's been up the amount of money that you are up, who has given so much valuable information and give so much back. So thank you for that. Thank you for your transparency. Um, just a quick question, like for someone who wants to get started, like for someone in the first couple of years of trading losing, what's your best advice for them to obviously go on your Discord and click and learn? But other than that, like, do you have any advice on how to get started from lessons you've learned in the past?
Well, I'd say, find a mentor, find someone who's successful, and kind of try to emulate what they do. And not all gurus are successful. So, maybe they put it on their Twitter, but in reality, it might just be a facade. So try to follow someone who's successful on a regular basis. They still trade a lot, and they're trading. You see they have verified returns, like on Kinfo. And I would also say, realize it's going to take a long time to get good at trading. Some people it takes years. I mean, it took me years. It took me at least 5 years to become good at trading. And so you don't go big, don't blow up your accounts. Make sure you're profitable for several months before you increase your size. And once you figure out, that you are profitable and consistently profitable, then you can increase your size and get exponential gains, like I said. But yeah, I'm helping people out. Like one guy here, Puerto Rico, he quit his engineering job. Now he's trading full time, under my help. And yeah, and like I told him, I'm like, yeah, keep it really small. I mean, expect to lose for a while, and then go big, because I'd hate to see you like have to take a mortgage on your house or something after losing all your money trading. Try to make it last, and give it, maybe assume it might take a year to get good. Some people pick it up quick. It only takes a few months, but some people can take a year or more to get better. So make sure you've definitely have a good profit before you increase your sizing on it.
Adam, it was a pleasure to interview you. You've done some incredible things, and thanks for everything you give back.
Yeah. Thank you, Steven.